Hi everyone, so this is a trade idea for this week, and this is for copper short puts, which should have about a win probability of about 97% chance. Now, why specifically short puts on copper? And it's because price is stabilized and it's unlikely to drop any more significantly. It already dropped quite a bit because of the tariffs. It went up to begin with and then dropped pretty hard, and it's just something to remember that commodities, and not all of them, but copper, for example, it crashes upwards. So everyone wants cheap commodity prices, and if the price goes up, it basically is equivalent to the S&P going down. So commodities, they crash upwards. So by selling short puts, even if the price is going to crash upwards, it's going to be totally fine for us. So if volatility increases, we should be just totally fine. Now for the position management, take profit is always 50% of credit. And the risk management is pretty simple. We either sell the futures contract if the price reaches the puts. So basically we can set up a sell or stop sell order at the strike price to sell the future. And then obviously we don't have any directional risk, but then you will need to manage the position. If it goes above the short put, you'll have to exit for a very small loss, and if it goes down again, you'll have to place the order again. So it's a bit more advanced, very unlikely to happen obviously. Or you can just roll the puts once you're down 100 or 150%. You can just roll it into the next expiration and move the put a bit more down, and obviously it will add more risk value or more risk in terms of time, but you are pretty likely to profit at some point. Now the big thing is the position size. It has to be 2 to 3 put contracts per every 100k account, or every 100k that you would have in your account. If you go too big on this stuff, there will be no way to either sell the futures or roll or do anything if the price kind of crashes down too quickly. Just because you will be over leveraged, and we don't want that. So keeping the position small is absolutely key in this case. So this is what the graph looks like. So I'm looking at the December contract for copper, and you can see the price has been above this level for quite a while. So basically since March 2024, and the price is just kind of slammed all the way down to to its averages. And even though it doesn't look like a big range, it is actually a big range. It's just dwarfed by this massive down move. And this is what happened in April with the tariffs, right? So when the tariffs were announced, the price dropped on copper, then went up. So I expect the same thing to happen. And if not, obviously we have a plan in place to protect the short puts, and we are keeping the position size really, really small. So I would select the strike 4 for copper futures. So if you look at what it looks like, it's 46 days to expiration. So the expiration of September 25th. If we sell the short put 4, we can collect about $268 of credit per contract. Now margin is a bit smaller actually, as far as I checked. The probability of profit is 95% chance to keep the entire amount, but if we take profit at half, it goes up to a bit over 97%. We have a pretty nice data of $12. And like I said, if we go and we do 3 contracts per every 100k in an account, we're looking at about $800 in credit. So you can profit about 0.4% on your account, give or take, by staying small, staying consistent. And again, these trades are, I usually find a trade weekly or a good trade idea, even though it's not that much profit, but it's very consistent. And if anything really happens, you have a way out, which is not something you can save. Someone just wrecks out 10 of these contracts, or whatever, 6, 7 of these contracts to make a big profit. It will probably work until it won't, until one trade will just completely eliminate the account, which is exactly what we want to avoid, and what differentiates a pro trader, an actual trader, from someone who just kind of makes money and then loses everything in a week, which is what usually happens. So this is it for this video. Hopefully it was useful. I think it's a pretty good trade, and yeah, that should be it. Thank you again, and I will catch you in the next one.